Late last year, JPMorgan quietly rebranded its blockchain division. Onyx became Kinexys with a big promise. It's already processing over $2 billion every day across 5 continents on a private blockchain that runs 24 by 7. It did not make front page news. After all, banks rebrand projects all the time. But a few months later, something interesting happened in India. Welcome to Blog Recap, simplifying crypto one story at a time. Axis Bank, from its Gift City branch in Ahmedabad, Gujarat, joined Kinexys and flipped on its own node. That means Indian corporates can now hold and move US dollars instantly, even at midnight, without waiting for New York to open. But why is this a big deal for India's financial system? Let's break it down. For decades, cross border payments have run on a patchwork of batch windows, cut-off times, and manual reconciliations. If you ever wired dollars on a Friday evening, you know the ritual. Funds vanish into banking void and reappear if you're lucky by Tuesday. Back in 2019, JPMorgan built a private Ethereum based ledger to fix its own treasury headaches. That project is called JPM Coin, which lets banks move dollars between internal branches instantly. It worked so well that a few big clients asked to join, and Onyx was born. Fast forward to 2024, and the platform is now called Kinexys, which claims $1.5 trillion in total processed volume and tenfold jump in annual payment traffic. So, what Kinexys actually does? Think of Kinexys as a permission blockchain for banks. Only vetted institutions run nodes, only approved clients can hold balances, but once you're inside, the rails behave like crypto. That is, 24 by 7 settlements, programmable transfers, you can move cash automatically with preset rules, and multi-asset support, maybe dollar today, bonds tomorrow, and euros next quarter. Later this year, JP Morgan plans to connect its global foreign exchange desk, letting treasury teams swap USD for EUR on-chain in real time. Repo trades, tokenized money market funds, and even identifying layers for privacy are all on the roadmap. Now one must think, why did Axis Bank jump in? Well, Indian companies have long struggled with dollar liquidity after US banking hours. An exporter in Chennai might get late night payment confirmation but cannot actually move funds until Fedwire reopens. By joining Kinexys from Gift City, Axis Bank offers always open dollar clearing without waiting for New York. From Axis' perspective, it is also a strategic hedge. As Reserve Bank of India experiments with wholesale CBDC and fintech flirts with stablecoins, traditional banks risk losing relevance. Running a Kinexys node keeps them plugged into the next generation of settlement rails without ditching regulatory comfort. Kinexys is not the only private ledger in town. HSBC's Orion, Citi's regulated liability network, and the BIS M-Bridge pilot offers similar ideas. But JP Morgan owns scale. $2 billion a day may sound small against Swift's numbers, yet it proves large clients are willing to trust code over correspondent banks. The bigger twist? Well, private chains rarely stay private forever. Once treasurers taste 1 second settlement, they will ask why the same dollars cannot hop onto public blockchains like Ethereum, Solana, Base, where liquidity is far deeper, from USDC pools, tokenized treasuries to on-chain foreign exchange. JP Morgan admits as much. Its own white paper talks about a multi-chain world and interoperability with central bank digital currencies and stablecoins. In other words, Kinexys could become a gateway, a safe bank-braided sandbox today, a bridge to public networks tomorrow. So, what do you think would trip all of this up? I can think of three things. Number one, regulation. Central banks may worry that 24 by 7 dollar rails will weaken capital control firewalls. Number two, competition. If the US passes a clear stablecoin law, corporates might skip permissioned ledgers and hold regulated USDC instead. Number three, network effects. A closed system needs many banks to matter. If rivals refuse to join, volumes plateau. Now, why should India care? Gift City's ambition is to pull global finance into Indian time zone. Having Access run a Kinexys node is an early proof point. If ICICI, HDFC, and SBI follow, dollar settlement could shift east, reducing friction for Indian exporters, importers, and SaaS firms billing US clients. In long term, RBI could integrate its whole CBDC into same fabric, letting rupees and dollars clear on equal digital footing. This would be a genuine step towards Prime Minister Modi's goal of turning India into an international financial hub. And for us, the everyday citizens, maybe nothing at first, but the rails that settle billion-dollar trades today often becomes the rails that move retail money tomorrow. Kinexys is still small print next to Swift, but it changes the rhythm of money. Banks in Mumbai, Dubai, Singapore can now pass dollars around like emails, unconstrained by time zones. The shift feels incremental until you remember how quickly Netflix replaced cable once streaming worked. The history repeats itself. The question is not whether treasurers will demand public blockchain access, but how soon. And when they do, the lines between a JPMorgan permissioned ledger and an open Ethereum or Solana ledger might blur faster than anyone expects. That's all for today's block recap. If you think settlement plumbing sounds dull, remember, the world's largest bank just put $2 billion a day on a private blockchain, and an Indian bank flipped the switch in Gift City. The pipes are changing, the water will follow. If you like this episode, follow and share it with a friend. And as always, this podcast does not offer investment advice, so tune back in when we have another crypto story at hand. Until then, see you next time.